Hey Roger, welcome.
Hey, how you doing, Rebecca?
Doing great. We're
Good.
optimistic today. We were just talking about that, Paula and I.
I love optimism.
Yes, yes.
Our
Lots of
glass is
positive
half
news.
full today.
Do
It's
we?
half
I
full.
I know our topic is PPP, but do we get to hear any RRF updates or anything
You
else?
know, that's what Paula and I were talking about too. She asked me that, and so I'm getting ready to update the presentation with what we know we're going to experience towards the end of the year. There is no RRF new money. That conversation is not developing in Congress.
Ooh.
I know. What has developed, and I read over it this weekend, so I was sharing with everybody, is Biden is proposing that new $1 trillion spending budget. It's known for the infrastructure and building the railways and such. Well, when you read into the bill, right, I did the whole briefing over the weekend. It is huge. Like the opportunities are huge for just about everybody, every small business within the country. And that's going to propel us in a really positive direction, I think, going forward over the next 5 years. So it's pretty exciting.
All right. See, I
Hmm.
love that. I feel good
I
already.
know. Exactly, exactly. And plus, I just got off an economic forecast with Moody Analytics and Experian Business Credit, and they're optimistic too, as well as what we're anticipating. There's low delinquencies. More lenders are trying to reduce their interest rates. They need to lend aggressively. Everybody's open to growth conversation. So, happy to say that the SBDC should be booming over the summer. Plus, there's more grant money that's going to support these people and for the program. So, very optimistic.
Okay, I was on board until you said booming.
Yeah, I know. Paul and I were talking about whether or not there was any money in the budget for vacations. Sadly, no.
Oh my goodness.
Yes.
A girl can wish.
That's right. But wouldn't that be amazing to see company or countries like Belize or maybe, some other fun getaway do some type of, offer? Just
Yeah, yeah. Some sort of training or support or mentoring. Yeah, yeah.
we can be creative there.
I'll give it another minute and then we'll get started. Everybody's anxious to hear more about this, I'm sure.
Hey, how are you? It's good to see you, Brett.
Thank you. You too, Rebecca. I just want to say hi.
Okay, just to make sure that we are considerate of everyone's time, we'll go ahead and get this started. Today, we are back with our Paycheck Protection Program, the latest updates with our one and only Rebecca Schultz. We love having Rebecca here. My name is Paula McCain. I'm a recovery business advisor for the North Central Texas Small Business Development Center. Don't know if you all realized it. Today is National Donald Duck Day. I'm more of a Bugs Bunny person, but
Quack, quack.
whatever. Yeah, exactly. Exactly. The SBDC is a leading provider for assistance for small businesses. We are grant funded, and that allows us to offer our services and our resources to you at no cost. And the hottest topic in town is still PPP and the latest updates. If you would put your questions, comments in the chat room, and we will get to them after the presentation. I now want to introduce the one and only Rebecca Schultz. Rebecca has been helping business owners access money and financial education for many years. She is the founder and executive loan consultant for CenterLock Funding. Thank you, Rebecca. We're anxious to hear what you have to say to us today.
Oh, thank you, Paula. Thanks everybody for having me back out. And I really do enjoy this conversation as it continues to evolve. And so today we're going to go over where we landed, right? The program ended just recently on the end of, or May 31st. And so we're really going to be focusing on what's happening or evolving through this conversation and what those next steps are. All right, so with that being said, I'm going to go ahead and start to share my presentation. Give me just one moment here. Got all kinds of presentations ready to go. Hang on one moment. Hang on, let's try closing out another presentation. Let's see if that now allows this one to open. Yes, there it is. Okay, here we go, team. Let's get started. All right, so we're going over the economic aid update, focusing on the Paycheck Protection Program. My name is Rebecca Schultz. I am the founder and executive loan consultant for CenterLock, and I've been in lending for 25 years. And let me tell you, lending has changed dramatically from when I started. Right now, we've got AI, we've got all kinds of new tools, and of course, complicated problems like the pandemic that is really challenging the industry in general. So I'm going to use all those years of experience. I'm going to bring you the updates and try to help business owners understand the access to capital conversation, right, and get the support they need to grow. All right, with that being said, I love this. I had to chuckle. We're all waiting to get forgiven, right? And so there are quite a bit of people on that forgiveness road. I just got off a presentation. If you joined early, you heard me talk about that. It was with Moody Analytics, a big component to risk management in the banking world. And they were able to cite within that presentation that over 70% of the PPP loans that have been granted over the last year and a half, right, getting close to that, have been forgiven, right? So the forgiveness is out there. We're all going to cheer for everybody involved, but let's talk about this concept a little bit more. All right, with that being said, I've shortened the conversation, just 3 main highlights. We're going to go over the updates, right? What's happening in the marketplace, what we're seeing. And then we're going to talk about the actual forgiveness component, right? What is that process? What does it look like? How do we prepare for it and walk through it? And then we're going to end the conversation on important details to remember. All right, short, sweet, and simple. So let's get started. All right, so the important update. So what's going on? Right, so we know that the program ended on May 31st. That was just a little over a week ago. And we know that they had made available $284 billion that was intended to go to the small businesses that were hardest hit in the form of both initial PPP loans, right, so that was for those that did not get support in 2020, as well as a second draw for those businesses that really needed it. So we also know that there were set-asides primarily helping small businesses that were not on record for getting the support in 2020. Right, so that means small businesses that had less than 50 employees, a lot of minority businesses, women-owned businesses, and veteran-owned businesses, right? Okay, we also know through the bill that they were very, very concerned about fraud or risk that was associated. So they had pumped the I guess you would say budget with enough money to be able to audit and do any type of prosecution for those that were misusing government funds. All right, so I say that because as we go through the presentation, I will focus on that. Right? In fact, I'm going to focus quite a bit on it when we get to documentation because I want people to be prepared in the event that there is an audit. Why? right? Not that I intend anybody to misuse government funds, but we know that there's quite a bit of money in that budget, and the government is on the hunt to make sure that it's been utilized properly. All right, so where are we on this final count, right? So drum rolls, $277 billion were dished out to businesses requesting that support. Right, so there was still a little bit of money left over, right? But that money, it's essentially being reappropriated. There has not been a conversation about expanding the PPP program at this time. In fact, the conversation that I'm seeing through the government and those that are monitoring the forecast, the economic health of the country, is that the country is successfully reopening. All right. And so with the reopening, they are planning on growth money, right? Different from disaster money. The PPP was disaster money. They're talking about supporting growth capital and helping businesses really target for that growth, improve the jobs, right? Because there's quite a bit of
Hello,
underemployment
this
right
is
now.
Brian.
And sorry, we're able to hear you. Just okay. And then we'll be talking about that growth capital coming up. But right now, no future PPP funds or disaster assistance is on the horizon from what we're seeing. So what was that breakdown? Right, so let's take a look at what the breakdown was. Remember, the priority for those set-asides for that government spending this round was to really help those smaller businesses that were more hard hit, right? And so when you look at their goals, what the set-asides were versus what they actually were able to disperse, through strategic targeting and support, the government was able to help those that they were intending to reach. So very successful program is what we're seeing the results as. Okay, so with that being said, we know that there's no more PPP money headed down that pipeway, right? It has round up. It's really all about that forgiveness conversation. So for those that have yet to go through the forgiveness process, I wanted to give you a little heads up of what to expect. And then we're going to evolve into that audit conversation, remember? All right, so let's get started. So what's going on in this forgiveness world? Well, let's just go over the basics. All right, I got to make sure everybody understands the basics. First, once you received the PPP funds, those were deposited into your account. Deposit, they're actually saying is disbursement, same thing. Right? You're given either 8 weeks or 24 weeks to use those funds. The government calls that the covered period. It's that time frame that the government's covering the business with working capital support. So you have a choice, either 8 weeks or 24 weeks. You choose as a business owner the time frame you want to use. All right, and then once you start spending your money, they have intended goals. 60% of those borrowed funds should be spent on approved payroll costs. Now, as we talk about payroll, it seems very simple, and for the most part it is. But I'm going to connect the conversation as far as these approved amounts to information on how you actually went into the loan. Right? I call that the way we come in is the way we find ourselves going out of this loan. So that 60% is really tied to whatever payroll or wage support you requested in the original loan amount. That goes back to the documentation that was used in order to justify that loan. So if you're using 2019 payroll data, right, you want to know who those jobs were, who those owners were that were being compensated in 2019. If you're using 2020, again, you want to look at the payroll records that were used in order to generate the loan amount and then really understand that as you're applying to these use of funds and the spending. Okay, so 60% of money has to be spent in those approved payroll costs for which you borrowed. All right, so how do they know that you spent 60% outside of just looking at statements, right? Well, they've come up with two specific metrics or ways that they measure that you've accomplished this goal. The first metric is going to be what we call full-time equivalency headcount, also known as FTE. Right, so FTE from when you took out the loan to when you finished your 8 or 24 week covered period or when you spent all the funds. All right, we'll talk a little more about that. They want to measure the headcount and show that you maintained that headcount. Right. Next, the second metrics follows the salary and hourly wage conversation. once the government gives you these funds to spend, right, with the goal that you spend 60% or more on payroll, you want to make sure that the actual wages, either hourly or salary being paid to those employees, are within 25% of the wages pre-disaster, right, or from the time frame for which you calculated your loan amounts. Now that gets a little complicated, so we'll go over that in a moment. All right. All right. So those are the two metrics, that you keep the same head count and you pay those people within 25%. Flip that around, 75% or more of what they were being paid before the disaster. All right. So that was 60% of the funds. The remaining 40% can be spent on these approved non-payroll uses, which they've expanded the category, right? So it's mortgage interest, rent or lease payments, essential utility expenses, covered operation expenditures, covered property damage costs, and then covered supplier costs and covered worker protection expenditures. Woo! I know. We're going to go over that in more detail, especially when we get to the documentation section. All right, but just know no more than 40% of these PPP funds can be spent on those approved non-payroll costs. Now, we'll talk about this a little bit more too, but out in the real world, where I'm having these conversations with businesses on gathering the documentation and trying to prove this, I'm seeing a lot of misuse of funds, right? And I don't think it's intentional. I think people are really trying to adhere to the guidance that's been provided to them, but they're not slowing down enough to really understand the conversation that they're having. So we're going to try to curtail that. I'm going to share some of those stories with you in a minute to help everybody really focus on what is these eligible non-payroll expenses and payroll expenses. All right, so that'll be coming. I just want you guys to understand that this is the requirement to which you would be signing off on and trying to show your documentation that you adhere to going forward. And this type of spending records or guidance, it's covering that business for up to 4 years from the time they've taken out that loan. Ouch, right? 4 years. All right, so moving on, let's talk about some clarifications for what you're to see through IRS records and really treatment of these funds. All right, so they made a clarification at the beginning of this year, and that's actually almost half a year ago, right? 6 months ago. And so any of the CARES Act money, including these PPP loans, they're not considered taxable income to the IRS. Right, so make sure if you received money here in 2021 that you think about that as you're going into 2022 and you're trying to understand your financials. This money, this PPP funds, right, is not taxable gross income. All right, with that being said, any uses of these funds, so once you've received PPP funds or any CARES Act money, if it is used for an eligible deductible expense, that is okay. You can deduct that. All right, that actually is a transition from what you were told last year. So I just want to make sure everybody's on the same page. You still can take eligible deductible expenses for using these PPP funds or CARES Act money. All right, so let's just quickly go over this compensation cap conversation. So going into the PPP loan, they had some caps on salaries or support that business owners could qualify for. And so these caps over the salaries or the wages that could be used to calculate the loan amount was set at $100,000. Okay, so any employee making an annualized rate of pay above $100,000, that amount above that $100,000 limit was subtracted from anything that was used to calculate your loan amount, right? So the way you come in is the way you go out. So when looking at your expense records, you cannot include any annualized rate of pay for any employees above that $100,000 annual amount. So if it's an 8-week covered period of time and you're just getting the support for 8 weeks of that $100,000 amount translates to $15,385 max. All right, for a 24-week covered period of time, 24 weeks or 6 months of that $100,000 amount translates to $46,154. Pretty simple, right? Not too hard. Okay, so the owner compensation caps, right? And this is for owner employees, self-employed individuals, independent contractors, or general partners. A lot of these people would be filing under Schedule C, not all, but a lot of them will file under Schedule C, right? In that case, the rules get a little different for you, all right? You're still capped, just like all employees, at the $100,000 annual figure, right? But they've added one additional requirement, and that's for shareholders or owners with 5% or greater interest in the business. They want to make sure that you don't exceed paying yourself what you paid yourself in 2019 pre-disaster. All right, so if you just got a bunch of government money, they don't want you to personally benefit beyond your pre-disaster time frame, and that's why they've put that measure in place. So again, $100,000 is the cap. If you're using an 8-week covered period, that means you can't pay yourself more than $15,385. Or if you made less than $100,000, right, you cannot exceed the 8 weeks worth of your 2019 compensation cap. All right, so in your documentation that we talk about for the audit trail, you want to make sure that you're really clear on what that 2019 personal compensation was. All right, you want to have that available for any audit. Or if you're using a 24-week cover period of time, you cannot exceed 2.5 months worth of your 2019 compensation or that $100,000 figure. Okay, so again, you'll be looking at that documentation, running your calculations, but just so you know, $100,000, right, divided by 12, multiplied by 2.5, that gives you a cap of $20,833. Not too bad, right? Not too complicated. Just make sure you're looking out for that. All right, so they did include some additional spending measures, right? Those are the new non-payroll eligible costs that included covered operation expenditures, um, as well as cloud computing, human resources expenses, any accounting needs. All right, so if you had any type of transition from working face to face or having your employees in the office with you, and you had to convert and really pay to make that happen, or let's say you're trying to meet the requirement for headcount and you ended up having to get help through an HR staffing team, or you had to hire your accountant to help you keep up with your hours for your FTEs, as well as any type of reporting for meeting the government requirements here, then those expenses could be included in the non-payroll expenses up to 40%, no more than 40% of the loan. All right. They also allowed for any property damage because of any, public disturbance or civil unrest from 2020. All right. Any increases in supplier costs. Supply chains were horribly disrupted. All right. I was just listening today talking about the price of lumber had gone up 600%, right, since last year pre-COVID. 600%. So any increase in costs that that business owner suffered and could not control, right? They can document that in bills, bids, quotes, payments made to the suppliers, get the documentation, and those increased costs could be included in your non-payroll expenses, as well as covered worker protection expenditures like PPE, any temporary barriers that were created in order to keep your team or your customers safe, right, to follow and adhere to government guidance since March 1st of 2020 all the way through the end of your covered period or the national disaster, right? So you would keep copies of those receipts or expenses to document that. All right, so good to know what that is and that you're making sure you're documenting it well. Right, now, just like you saw for the payroll compensation, right, those caps that we talked about, the $100,000 or 2019 owner compensation caps, well, for the non-payroll expenses, they also have caps. And when you think about this, it makes perfect sense. So we're going to go from higher level, we're going to think about it rather than going straight into the conversation. Right, so if you're looking at any expenses that would be considered eligible through this program for non-payroll expenses, you have to take into consideration any offset to your contracted expense. Right, give you an example. Let's say you had a rental agreement, you're renting some real estate property, right? And in that agreement, you had the ability to sublet. And in fact, you had a tenant that was paying you a portion of your rent, right? You were offsetting that through that income or revenue. If you've got a situation where you're offsetting your expenses, the government's asking for you to just take into consideration your net exposure, what your actual physical exposure was. Right? So you can't take in the large amount. You have to think through what was the offset and include that. All right. So example would be, again, if you're renting and you have a tenant, if you are buying and you have a mortgage and you're maybe leasing out a portion of that real estate, then whatever that percentage of real estate that you're leasing out, right, that percentage of expenses is taken off of your particular expense exposure. And then if you have a home-based business, which is happening a lot in today's time, then you're limited to whatever your direct home-based business or office, that percentage that's being reported on your tax returns, you're limited to that exposure on any, for instance, utility expenses, mortgage interest expenses and such. All right, so think about any offsets or sharing of those expense obligations, and then you're taking the net expense exposure for filing your PPP expenses. I know, lots of fun. All right. So early on in this conversation with the government, right, which is about disaster and what the government calls continuancy, they measure continuancy, making sure that businesses continue to survive, right? These disaster programs were set up to help those small businesses survive the pandemic. Well, when the government put trillions of dollars into the economy to support small businesses, right? They're doing so with a requirement that they know what's happening, right? They want to make sure that they're following the conversation. And so they've placed a big notice of change of ownership out there for businesses that might be in a situation where they're trying to pivot, they're merging, being acquired, maybe they're re-envisioning their operations, selling off equipment, right? Essentially, they're covering the conversation to make sure that they're documenting any type of pivots that change the ownership. They're trying to make sure they're accurate on this continuing conversation. All right, it's important to the government. So with that being said, if you are looking to do a material change in ownership, which that has been defined as selling 20% or more of the shares or ownership of your business, okay, sales or transfer. If you are maybe selling 50% or more of your business's assets based off of fair market value, or if you're merging into or with another business entity. If you're doing any of those going forward before your PPP forgiveness takes place, then you want to make sure that you're reaching out to that PPP lender that's supporting your account or your loan, and you get their permission to make this type of change, right? That impacts the continuancy conversation, and they want to see a copy of that drafted agreement ahead of the actual transaction being completed, right? So make sure you're getting the blessing from the PPP lender as you move forward if you have not yet received forgiveness and that's a transaction you're looking at. All right, so we're about to jump into the actual loan applications, but before we do that, I just want to explain from high overview that there are three different forms, right? And so the form that you're going to use is going to be relative to your unique situation. All right, so we're going to talk about Form 3508S. S stands for simplified. Form 3508EZ. It really is easy, right? And Form 3508, the long, nasty version, all right, with all the complicated stuff. So we're going to go all through the three of them, giving you an example of what that conversation looks like. But I want people to understand that although you'll be looking at PDF versions that are made available through SBA.gov, a lot of your PPP lenders have automated this process online. They will invite you to apply for forgiveness and most likely give you some instructions or videos to watch in order to know how to do it appropriately. So we're going to go through the conversation today, make sure you understand the questions that are at play, and we're going to use the government forms to host those questions, but your unique process may look different. Okay, and it's going to be guided by that particular PPP lender that you use to support the transaction. Those lenders have the freedom to change up their process and to automate it in a way that best fits their internal process. Okay, so what you see here may look different when you get to the table. I also will share with you that a lot of the lenders for the this year for the PPP second draw or the initial draw from 2021, they're opening up those portals for forgiveness after July 1st. Not all, but that's what I'm seeing consistently in my market is they're putting that conversation on hold temporarily, allowing for at least that 8-week period to be met before they automate and invite businesses into the forgiveness process. So if that seems to be something where you haven't heard anything from your lender yet, most likely they're following that delayed protocol just to make sure that they've got everything organized and accurately accounted for in their internal system before they add more complexity to it. Okay, so just giving you a heads up. All right, with that, the different forms are going to help you calculate any reductions in forgiveness and what your forgiveness request amount is. You're going to learn through the instructions, right, that there's quite a bit of flexibility on time frames, how you frame your conversation, the 8 weeks versus the 24 weeks, the alternative covered period versus the covered period, all these terms that you can find relatively quickly, right, as well as the government who's been following this complex conversation about employment, about payroll figures, right, a lot of things that are outside of the small business owner's control. And they've provided what we call safe harbor definitions and guidelines to help businesses find full forgiveness if at all possible. All right, so good conversation, but let's dive into the details. All right, so let's talk a little bit about safe harbor. I mentioned just a minute ago that safe harbor allows for business owners who are really trying to follow the intent of the law, right, and to do well with the funds that have been placed in their custody, right, their care, to make sure they're guiding to that. Well, the government, who's been following the conversation, has identified a couple scenarios which the business owners have zero control over. And so they've given you this leniency, these safe harbor designations. But for the business owner, what they have to do is they have to know how to document them, right? And how to frame the conversation in order to find full forgiveness. So let's talk about that, right? So there's really 3 safe harbor definitions that are out there. 2 of those safe harbor definitions center around this full-time equivalency or FTE headcount. So remember, the number of employees you have in going through the application needs to match the number of employees you have at the end of your covered period. All right, so that's that stability for payroll they're trying to support. All right, so the 2 FTE safe harbors, there's FTE Safe Harbor 1, which centers around businesses that were forced to shut down or reduce activity because the government was concerned about the pandemic, about exposure. All right, so I'll give you an example. The restaurant industry, right? They were forced to shut down either 100% of the in-person dining, right, or the face-to-face communication or dine-in, right? And then they were slowly reopened over time, right? Maybe 25% capacity, 50% capacity, now 100% capacity, right? During the covered period that you were trying to spend the money, if you were suffering a reduction in capacity, which meant that you just couldn't keep or retain the staff to cover those hours, right, or that type of workload, then you would not be penalized for not having the same amount of headcount. Right? That is the FTE Safe Harbor 1. You just have to know how to frame the reduction in headcount against one of the 3 government industry or entities that were monitoring the reopening guidelines. Okay? All right, so that's Safe Harbor FTE 1. The second Safe Harbor FTE 2, right, centers around 6 different type of scenarios you could document and then avoid penalties. The first is an employee that refused to return to work even after you provided them with a written offer. Okay, so there's a lot of that right now. And in fact, they're trying to understand why people don't want to return back to work. And they don't know for certain what exactly it is, right? I saw some polling results just this week on this topic, and they think it's just a blend of a bunch of different factors. But if you're one of those businesses that can't seem to find or attract or retain the type of talent, and you just can't do it during this covered period of time frame, you can document this written request and their response not to return and find safe harbor. Second category would be having to fire for just cause. So if employees aren't showing up for work or they're not following the guidelines that you've set out for them, just document the fact that you had to fire. Right. Next, let's say you have employees that have moved on to better positions and resigned. Holding on to the resignation letter and showing where you tried to attract and retain talent during that time. You tried to hire back up to fill that position. Documenting that conversation is an allowable safe harbor. All right, so let's say an employee has maybe difficult childcare arrangements, right? They can't necessarily find that childcare at this time, and it's hindering their ability to work full time, the same number of hours they worked pre-disaster. If they voluntarily requested to receive reduced hours, right, and you've agreed or allowed them to do that, that is a safe harbor scenario, right? Or let's say reverse that. Let's say you had to reduce hours during the pre-disaster or the disaster conversation, and once you got the funds from the PPP, you tried to reverse that and give them the same number of hours they had pre-disaster, but they refused. They were good with making less money and working less hours. You can document that rejection of the increased hours from that employee and avoid any penalties. And let's say you just weren't able to find positions, people to work in those positions, and you tried really hard, right? But during that covered period, you weren't able to get willing candidates in there to work that qualified. In that case, document the interview process, document your posting of those jobs, and try to cover yourself with as much detail to support the safe harbors, right? But that is a safe harbor. All right, just remember, if you're choosing the 24-week covered period of time, there's a higher requirement for you to meet the FTE safe harbor. Right, so you want to be really careful about documentation for that period. Right, so the third and final safe harbor conversation centers around the salary and hourly wage reduction. So the goal going in, remember the basics going in, is that they want to make sure you are paying employees 75% or more. You had up to a 25% reduction grace there, right? 75% or more of what they were being paid pre-disaster. And just to reframe that here in 2021 with the second round of support, right? Pre-disaster is the wages that you are paying that were used to calculate your loan amount. Right, so go back to what that time frame was and how many employees really accumulated those wages, and you're going to be going through that to really understand how you use the funds for this time frame of covered period. All right, so you need to make sure that the hourly amount or the salary amount is 75% or greater. But if you're not able to do that, let's say you have a situation where you're looking at those gross wages during your covered period, and maybe you were just below that 75%, but the actual hourly amount or salary amount was raised to what it needed to be in the nick of time, right before the end of that covered period. As long as you can document you've done that, you can meet the safe harbor requirement. That's a godsend for a lot of businesses. All right, so we know that the government's on our side, right? They're trying to help us understand and frame our unique situations. They understand that there's challenges we can't solve, right? Even though we're trying to adhere to their guidelines, and they've given us a little bit of wiggle room in order to make that happen. All right, so let's talk about how we document all of the spending to show that we did and try to live up to the requirements we signed off on. All right. So, record keeping is key. I cannot say this enough. You must slow down and document. Now, when you are applying for forgiveness, especially if the amount of the loan is small, and when I say small, I mean under 150,000 in loan amount, you're still going to be required to keep your documentation. It's still important for you to make sure that any of these safe harbors that you're claiming, that you did in fact, live up to that. And you do need to match your spending records with your pre-disaster activity. Okay, this is disaster funding. The funding is meant for you to survive. It's not meant for you to really grow and thrive, right? That's a different conversation, and the government has given us different tools to do the grow and thrive. So record keeping is over disaster related support to keep the business to continue, right? I recommend what I call the two-pronged system to show your records of how you spent the government money. Okay, two-pronged system. First prong is always going to be your bank statements, right? You're always going to have to show that the money left your control during that 8-week or 24-week time frame, or maybe even before, right? You might be able to show that you spent all of the appropriated money properly before the end of your covered period. That's allowable too, but you want the bank statements to show the money has moved hands. Okay. Second, you're going to want some level of detailed spending record, right? And that should be a bill, an invoice, a statement, canceled checks. It should balance back to the bank statement, so you should be able to justify that money leaving your control, right? It's just going to dive into the detail of how you use those funds, and you want to make sure that the use of those funds is one of the eligible uses. Now, I mentioned earlier that I keep seeing people misuse the government funds here, and that detailed spending record, having a master of that conversation, right? You mastered it. That is important, right? So we'll talk more about that in a second. Needs to be disaster related. So it has to be for expenses or operating that was essential to that business pre-pandemic. Okay, so that's a little confusing. I'm going to give you some scenarios to help paint that picture. All right, let's say we have a business, and in that business, we have identified where we are losing sales, right? We just don't have people to buy our products or services. Now, when we're identifying the past, we're trying to understand what's happening, we're trying to pivot. If we can identify that conversation of lack of sales being wholly related to our business operating off of a section of the industry that was hardest hit by this pandemic, let's say hotel management. Okay, hotels were just devastated in this, right? And we provided cleaning services or something of that nature to that primary dominant group. Then when we're talking about the non-payroll expenses, when we're talking about use of funds, we're talking about any of those approved categories just to help our business survive. Note that marketing is not part of that, right? They're not allowing for marketing through the PPP loan. They're not allowing for you to purchase new assets. They're not allowing for you to open up a new business, right? To be able to explore that. That's all growth. What they are allowing you to do is to pay your operating bills, those bills that were in existence pre-disaster. They're allowing for you to maintain the headcount so that you do have team to be able to rebound from. Make sure that your spending is associated to disaster recovery. All right. And it's got that pre-pandemic, pre-disaster connection. So, example, let's say that I have a loan that I took out after the pandemic hit, but before I was able to get any funding from the PPP funds. All right, let's say I took out a predatory loan. They charged me a lot of money. They charged me a weekly amount, a weekly payment, and they suck it directly from my bank account. Not the ideal situation, by the way. I cannot make payments to that loan because it was not necessarily a pre-disaster loan. I took it after the pandemic or after the disaster happened. You have to be careful, right? As well as let's talk about lease agreements or rental agreements. I can make or use my PPP funds for those agreements if I was in that lease contract pre-pandemic or pre-disaster. I cannot turn around and get into a brand new lease agreement after that February 15th, 2020 deadline, right? And still expect to use my funds for rent or lease agreements. It has to be a pre-disaster connection. All right, so when you're thinking about record keeping, when you're thinking about using these funds, make sure that you're answering that question. This is important for your business to continue surviving, right? This is related to the approved expenses, and if you didn't have this support, you would not be able to continue operating, right? Remember, that's very different from the growth conversation. And the SBA is allowing for that growth conversation. It's just not through the PPP program. Okay, so I told you earlier there's a two-pronged system, right? Two-pronged system that I want you to document, right? And this is really for any audits. Now, I showed you $50 million just for this round for 2020 was allotted to audit and fraud mitigation. And there were several other tens, if not hundreds of millions of dollars last year that was dedicated toward fraud and audit mitigation, right? In this situation, you need to make sure you're keeping up with your spending records. Each time you turn around and you're reading the details from these applications and the guidance from the government, they're telling you they're going to audit everything. Now, in my world, I'm seeing them audit small loans under 50,000. It's happening, right? So you want to make sure that you're keeping up with your paperwork. So what does that look like? So if you're trying to audit or detail out your payroll. You want your bank statements showing the payroll was made. You want any payroll processing records, proof of how much you paid your employees. You want the number of hours worked if you pay per hour, right? Name of those employees, full or first and last name. You want to document any 941s or employer paid taxes for those wages. All right, state and local taxes, and any type of proof of employer contributions for health benefits or retirement plans. Document all of those eligible expenses for that covered period. All right. I know. It's a lot of work, right? Just make sure you're documenting. Also, to know that they're still talking about just W-2 wages or owner employee compensation when we're talking payroll. I was talking to a business owner just the other day, and they were talking about their 1099 employees. They did more contract work, and they thought they had spent all the money. They didn't even pay themselves, by the way. They paid all these other contractors for their labor, and they were getting ready to go and file for forgiveness. And unfortunately, the 1099 labor is not an eligible payroll. What they needed to have done is to show where they paid the owners, right? And they didn't pay the owners, so now they're in a pickle. So remember the details, right? W-2 wages or owner employees, those 1099s, they can go as independent contractors or self-employed individuals and get the same type of PPP support. You are not to spend your money covering their payroll because it doesn't count. Right, and then for the non-payroll expenses, mortgage interest, mortgage being real estate or personal property, you want to show how much the interest payments were for that covered period, that 8 or 24 weeks. Document it, get a lender's statement showing the interest portions, right, as well as the bank statements showing that you made the payment. Right, rent or lease agreements, you need the actual agreement. Make sure that was in force on or before February 15th of 2020. Show your canceled checks, maybe a landlord statement showing the payments made during that covered period. Please remember you cannot prepay your lease, all right? Doesn't allow for prepayment. You can only cover either past due rent agreements or those that are current up to the end of the covered period. And then utility expenses, they're just covering essential utility expenses, electricity, phone, internet, waste, gas, um, and then transportation, right? Transportation being transportation of any essential um, expenses, right? Not necessarily just gas getting to and from customer or clients. They don't allow for that. All right, just make sure you're keeping up with all of these expenses. The new expenses are also included. So if you've got supplier cost, anything but perishable goods, right? So if you're a restaurant, you can't put the carrots and potatoes on the supplier cost. It has to be inventory or product or increased expenses, and you have to document it through a bill, an invoice, something tangible. All right. And then for any type of disturbance, vandalism, You need to make sure that you're showing the amount that's after the insurance coverage. So whatever came out of your pocket and expenses or repairs after the insurance, right? And then for the what is it? Converting to the cloud-based conversation, you make sure that that happened from March 1st of 2020 through the national disaster, right? So it has to be within this disaster time frame, and it was not a reoccurring expense. I had a business owner come to me the other day, and their Zoom account set up for renewal, and they want to know if they can include the Zoom account, but they had had the Zoom account for years, right? That's not necessarily a pivot conversation. That is just an existing account that they had trying to cover their payroll or their operating expenses. That's not necessarily a PPP conversation, right? That might be an idle conversation, but not a PPP. All right, so remember you're keeping up with all of those expense records. All right, with that being said, once you've got all that pulled together and you know that you spend enough funds in order to cover the PPP loan amount in that right priority, 60% or more for payroll, 40%, no more than 40% for non-payroll, then you're ready to start filling out the forgiveness application. So before you jump in and do that, just make sure you have a calendar. You need to know your dates, right? 8 weeks, 24 weeks. You want to have a calculator. Just something simple, addition, subtraction, division. On my end, I just use Excel so I can keep notes as well. And then all the support documentation we just talked about, right? Your two-pronged sources, as well as your pre-disaster support documents. You need to know how much payroll you were trying to cover or you claimed within your loan amount, right? So the way we come in is the way we go out. We want to make sure how we calculated the wages going in. That's what we're going to have to duplicate going out. And then just make sure you've got all the documentation in that two-pronged process. All right, so let's go over the forms. Form 3508S, S stands for simplified. That's for all loans that are $150,000 or less. And honestly, that makes up 80% of the PPP loans out there in the market, right? That's a huge amount. So in this case, it's a one-page form. They've tried to make it very simple for people to complete, so it won't take time. But even though it's simple, they're still requiring that you document your expenses. Audit is still a potential here, right? And that you are self-certifying that you've met the program requirements, which also means you still have to meet the same FTE requirements and hourly wage requirements. Now, with that being said, I know this looks really squishy, right? So I'm going to go ahead and zoom in so you can see it. Again, we're just going to go over this. Your particular PPP lender, they may very well have a digital version of the application, but, right, every lender is going to be different on what that looks like. We're just going to go through the PDF version that SBA has made available, right? You're going to understand the conversation and see the questions that are being asked. Now, all of the forgiveness applications we're going to be talking about, they have the same format. And so not to bore you, not to, put too much detail in your brain on a Tuesday afternoon, I'm just going to go through this once in great detail. And then next time, I'm just going to tell you deja vu. And you'll remember that you've already seen this and we've already gone over it, okay? All right, so at the very top, you've got this wonderful little box. This is exactly the same box or detail that was required for the PPP loan. So going through the forgiveness application, you want to match what you put on the PPP loan, right? It's just referencing the same data. So it's going to be your business legal name. That should be on the top of your tax return. Any trade name that you use on that tax return. The business address. The industry code, also known as the NAICS code. Remember, that should also be on the IRS record. Your tax identification number for the business. Also what's reported for the IRS. And then the contact information, business phone number, primary contact name, and email address. All right, so if you have taken two PPP loans, right, then you're going to fill out two separate applications for forgiveness. Okay, two of them, one for each loan, and you must reference each loan. Right, and you're going to put in your PPP loan number through the SBA. That's typically going to be on a promissory note, also known as note. You're going to do the PPP lender's loan number. That's typically a different number. That's for their accounting system. That'll be on a statement, or if you've been given online access to view your account, that typically will be there. You're going to put the amount that you receive from funding. That'll be on a promissory note. It should also match the bank statement for when it was deposited into your account. Okay, and talking about bank statements, it's asking for the loan disbursement date. That's the date that the money was actually deposited or dispersed into your account. So make sure you're using that date, the deposit date, not the contract date. That's secondary. Get the deposit date. And that kicks off that covered period or that spending time frame that you have, because until it was in the account, you couldn't spend it, right? Chicken before the egg. So right below that, you see the covered period. There you go. You'll put it there. It'll match your disbursement date to start. All right, next it's going to ask for the employees at the time of the loan application. All right, so this is really asking you for the FTE, that full-time equivalency. And to calculate FTE, they're giving you two different options. We're going to talk about that in more detail in a minute. Just remember, they're asking for FTE from before the loan. Okay, and then it's going to ask you for the employees or FTE at the time of the forgiveness application. But to be really clear, it's really at the last payroll cycle at the end of your covered period. Right, that's when they're trying to do the headcount. Once you end your covered period, then you can reduce headcount without any type of penalties. Right, it's just the time frame, that 8 or 24 weeks that you're electing, that you have to be mindful of that headcount. Okay, that being said, the end of your covered period is going to be either that 8 weeks or 24 weeks, which you're choosing. You can simply go to Google and say, what is 8 weeks from such and such date, your disbursement date? And Google, in its amazing wonder, is going to repeat back to you what that magic date is, and that will be how you'll complete that finished covered period. Okay? Nothing like rocket science. It's very simple. Right below that, it's going to ask you to detail the amount you spent in payroll. Okay, so you should have the payroll records there available. This will be your payroll amount. I'm just going to connect this to what we talked about in our basics conversation. 60% or more has to be spent in payroll in order for you to receive full forgiveness. Even though the form looks deceivingly easy, right? They're looking to make sure you spent that 60% or more. So make sure you're in that. Also, too, remember, it looks so easy, but we had the owner compensation conversation, right? So you need to make sure that if you're an owner with 5% or greater shares, that you're not exceeding any amount of what you paid yourself in 2019 for either the 8 weeks or the 2.5 months. Okay? Okay. All right, and then finally, it's going to ask you to request the loan forgiveness amount. How much are you requesting for forgiveness? You cannot exceed the amount of the loan, right? If they gave you 15,000, you can ask for forgiveness for 20. That doesn't make sense. The maximum amount of forgiveness is the loan amount, and you also have to be able to document you spent every penny of that loan amount in appropriate funds for you to request it. So if I was given 20,000 and I can only document 15,000 appropriately, I can only ask for 15,000 in forgiveness. And if that's the scenario, that's what I'm dealing with, I've got a choice, right? I either, take the 15,000 and forgiveness and then give them back the other 5,000 that I didn't use, right? Or I take the difference in a loan at 1% over that 5-year period of time. Right? It's your choice. You just have to show you documented all of the money and it's spent appropriately. All right, with that being said, you're going to initial next to these self-certifications that you followed the adherence to the guidelines, you spent the money appropriately, that all the information that you're claiming on the application and in the transaction is true to the best of your ability. You're not trying to defraud any banking systems, right? So they also list the penalties there, and I want to cry, right? You don't want to be anywhere involved in saying that you had false statements to the government on this topic, right? They can fine you as much as $1 million or put you in prison for as long as 30 years associated to fraud. So nothing anybody wants to play with. And at the end, you're just going to sign, date, and you'll be sending that off to your PPP lender to request forgiveness. Okay, so time frames for this conversation. It's different for each PPP lender because they've got an internal process, but I'm happy to report back for those that have used the digital platform, those lenders offering that solution. I'm seeing people see forgiveness directly from SBA within a few weeks. All right, so again, super simple. Just make sure that you're keeping up with your spending records and you know the conversation. All right, finally, let's move on. Form 3508 Easy. Right, the easy application is for any PPP loan that's above 150,000, and the business owners can agree to one of these two statements. One, that business owner didn't reduce any annual salary or hourly wages of any employee by more than that 25%. Okay, so again, they paid their people 75% or more of what they were paying them either per hour or salary during the, I guess you would say, reference period pre-disaster, right? And that reference period goes to the time frame for which they requested the payroll, right? So whatever that amount that you use to calculate your payroll, whether it was 2019 or 2020, right? I know. Okay, and then the number of hours that they paid those employees did not drop, right? So their FTE, the full-time equivalency headcount, did not drop between January 1st of 2020 all the way through the end of that covered period, right? So I think of these people as just being really solid. They're like rock solid business owners. The pandemic came and they held on the whole way through. Okay. Second group of people are going to be those that didn't reduce the salary or hourly wages by more than 25%. But maybe they didn't have the same FTE or headcount because they were required to reduce their staff or reduce their operating capacity because they were complying with the Human Health Services, HHS, the Center for Disease Control, the CDC, or OSHA. All right, and those restrictions were on them from March 1st to 2020 all the way through the end of their covered period or the end of the national disaster. Okay, so you can kind of think about this. These are people that did everything they could have, right? Didn't really have a lot of change, and therefore there's no penalties based on what we know. They did what they had to do. All right, in that case, the SBA PDF, same thing, right? Deja vu, this looks the same. The only difference on this form is instead of just focusing on payroll, you can see they've given you the other approved non-payroll uses there. So you can categorize those other expenses. Remember, the other non-payroll uses can calculate for no more than 40% of what the total loan amount was. Okay? And then below that, this is different. You're basically going to figure your potential forgiveness amount three different ways. And then at the very bottom, you're going to choose the smallest of these three potential forgiveness amounts to request forgiveness. So the three ways that they calculate forgiveness is going to be consistent on the next form we see. It's going to be the sum of all those eligible expenses, how much you spent. So it's going to be either the PPP loan amount, because again, nobody qualifies for more forgiveness than what they were given in loan, right? And then that's 60% of payroll costs. Right, so whatever that smallest forgiveness amount is what you're going to include on the account. Right, and that's pretty simple, right? Like that's easy. We got that. All right. So again, this is not too bad until you look at this form. Form 3508, this is the long forgiveness. Woo, this is for business owners that have a story to tell. All right. And so what you're looking at here is just my Excel version of how you frame your conversation. Because again, when you've got a story to tell, that typically means you didn't meet one of those two metrics. Remember the salary hourly wage requirement, or maybe that head count. And you're trying to figure out how you're going to frame that so that you don't get penalized and then you can find full forgiveness. Well, when you got a story to tell, you got to keep notes, all right? You got to figure out what was going on during that covered period and how you were trying to react, how you're trying to adhere to many safe harbors or guidance. So what you're seeing here is just kind of that playing out in a sample format. And so this is just Excel, and what I was trying to capture really 3 different time frames, and I'm comparing those time frames. That's what we call pre-disaster, or the reference period. That's the time frame for which we were calculating our payroll. Okay, and then that's the time frame you're calculating your payroll to understand how much of a PPP loan amount you'd be qualifying for. So how many headcount did you have, right? What were you paying them per hour or salary before? And that's kind of that measure to which you're trying to get back to as you are looking at spending your PPP funds. Okay, so pre-disaster. And then you've got your post-disaster. So this is before you got your PPP money. What happened, right? Did you reduce headcount? Did you reduce pay to people? Were you just doing what you could in order to survive? What did that look like for you? And then you're trying to frame the conversation of once you received your PPP funds, what did you do during that covered period to try to get you back to the pre-disaster level? Now, earlier I had mentioned that there's 2 different ways to calculate that full-time equivalency, or FTE. So let's talk about that here with the example in front of you. All right. So at the very top, this pre-disaster conversation, you're going to see that there was actually 6 employees for this company. 3 of those employees were full-time, full-time 1, 2, and 3, and 3 of those employees were what we call part-time, part-time 1, 2, and 3. Okay. Now, you can use an easy FTE calculation, very simple and straightforward. For every full-time employee, you're going to count them as 1 full-time employee, right? That's pretty simple. 1.0 FTE. For every part-time employee, you're going to count them as 0.5, or half an FTE. All right, that's easy, right? So in that way, if we're looking at this 3 full-time, 3 part-time, the 3 full-time would equal 3.0 FTE, 1.0 each, and the 3 part-time would be 1.5 FTE, right? 0.5 times 3. Okay. So that would give me a total of 4.5 FTE using the simple FTE calculation. Well, what you're seeing here is where I've opted for the second option. They have a more complex FTE calculation where you're actually using the hours worked, the average hours worked per week, and you're comparing that number by 40 hours per work week, 40 being the full-time work week. Okay, so in this case, my full-time employees, they worked 40 hours per week. So 40 divided by 40 is 0.1. Didn't change there. But you're also looking at this part-time employee conversation. They didn't work 20 hours. They worked 10 hours a week. So 10 divided by 40 is 0.3 FTE, not 0.5. So by using the longer FTE calculation here, I was actually able to drive the FTE headcount a little bit lower than that 4.5. I actually got a 3.8, right? So if you are in a situation where you've lost headcount or you found it difficult to get people back on board, depending on how many hours they work, you might be able to find more leniency in the longer FTE calculation. It's really up to you. Just whatever you choose, you need to be consistent all the way through. Okay, so it's the same method of calculating FTE towards the forgiveness side using the covered period headcount at the end of the loan. Okay, with that being said, you understand the FTE. In this situation, the scenario, the business owner had to let go of 4 people. They just kept 2 full-time people, so the headcount went from 3.8 FTE to 2.0 FTE. That's a problem, right? That's a penalty. So we see how they started to try to figure out how they frame their safe harbors, right? Do they meet the safe harbors? How can they document their way out of having a penalty? In this case, I've left some notes, right? So that part-time 3 person at the very bottom, they didn't come back. So we lost that 0.3 FTE there, right? Nothing we could do about that. Maybe we could document where they found another job or that they refused to come back when they were offered the hours, right? That would be a good way to handle that situation. And then you see part-time 2 person came back, but instead of coming back for 10 hours per week, right, that's an FTE issue there, right, they came back at 5 hours per week. And so then we've got this situation where now their gross wages are half, 50% of what they were pre-disaster, right? They were making $100 per week pre-disaster. Now they're making $50 per week pre-disaster. So is that a salary hourly wage penalty situation since it's 50%? Well, the answer is no, it's not, because they're still paying them $10 per hour, which is the same rate and pay they're making pre-disaster. So they didn't change the hourly rate, right? So that means it's not a true salary hourly penalty. But we still have an issue, right? We have an FTE issue. So the reduction in gross wages is not a salary hourly penalty. It's an FTE issue. We have more of a problem with our FTE. Okay, then you see where they're trying to struggle and get this all up there. So this part-time one person, instead of having them come back for just 10 hours per week, they offered them more hours. They brought them back at full time, 40 hours. And they were able to successfully bring back their other full-time worker, right? And so they were able to end the covered period at a 4.1 FTE headcount. So they more than met the requirement for the government, right? They exceeded the 3.8 and they actually came in at the 4.1 FTE. That is a good conversation. But you notice how we had to slow down, try to document it and understand it, right? And see what we were doing before and compare that to what we're doing during the covered period to really have a good handle on what penalties, if anything, we had to take into consideration. Now notice you're going to be just calculating the gross wages for those employees for the covered period. And those gross wages are the cash compensation payroll. All right, and that totaled the $18,000, and you'll see that number again. All right, so when you get to, you've kind of figured it out. You've got your game plan in place for what happened between your covered period and the reference period before the disaster. Then you can start to contemplate this Form 3508. Now, what I'm seeing is a lot of lenders are just requiring the full Form 3508 if the loan is above the 150,000 amount, because there are what we call self-certifications statements that you would have to check or agree to when you're going through this form. And those lenders, right, they're wanting you to self-certify that you met the requirements for forgiveness because they don't want it on them that they didn't check or they didn't audit it properly, right? They're putting all of the risk and responsibility back onto you, the business owner. That's a little scary for business owners, right? So you have to make sure you're slowing down and you're documenting the conversation and you're making sure you do in fact adhere to the guidance. Okay. Now with that being said, right, and most people will be filling out this form for those loan amounts that are above 150,000, you do not start on page 1, just like you saw on all the other versions, right? You don't. You actually start at the very back and then you work your way forward, and it builds on each other, right? You start with one set of information and then it'll show you how you multiply or add to get to the final page 1. All right, so we'll see that in a minute. We're going to go to the back of the application. We're actually going to focus on page 4. Page 4 is what we call the PPP Schedule A worksheet. Now the Schedule A worksheet is just that, it's just a worksheet. It's having you understand what you did during the covered period and really calculate any of the FTE issues or the salary wage penalties. All right, so you're going to see Table 1 and Table 2. Table 1 is going to be a list of your W-2 wage earning employees that made an annualized rate of pay of under $100,000. Okay, so these are not any high wage earning employees. By the way, if you're a shareholder or owner, you do not belong on Table 1 or Table 2. Right? You don't belong anywhere on this page 4. There's a separate section for owners or independent contractors, owner employees. You're going to be under page 3, and I'll show you that in just a minute. So these are just your W-2 wage earning employees. So in Table 1, for those that make under $100,000 annualized rate of pay, you're going to list all their first names, last names. We also list the last 4 digits of their Social Security number, right? And then how much you paid each employee in gross wages for that covered period of either 8 weeks or 24 weeks, right? So you start to see where that 24-week option really allows you quite a bit of flexibility, right? Because that's 6 months of payroll compared to just getting access to 2.5 months, right? Like you should definitely be able to spend that 2.5 months worth of payroll in 6 months, right? So a lot of leeway there, but you want to make sure that you're capturing the gross wages paid to each of these employees during that covered period. And then that total is going to come into box one. Notice that's that 18,000 I told you to pay attention to. Okay. Next, you're going to put the FTE headcount for each employee, right? Two different ways to calculate the FTE headcount. You choose which way, and then you're going to put the average FTE headcount for each employee in there. So box two is that 4.10 we talked about. And then for box three, under that salary hourly wage reduction, if you had a true salary hourly wage reduction, okay, that means that you didn't pay somebody 75% or more of what you should have paid them, right? What was their pre-disaster wages? Let's say it fell to 50%, right? You're going to basically look at what that gross weekly wage was, compared it to 75% of what it should have been, right? What it was in pre-disaster, 75% max. So the difference between that, you're going to turn around, take and multiply it by your covered weeks, and that's going to be the total that comes up into box three. Pretty scary if you see what I'm talking about, right? Can happen pretty quickly. Thank goodness for the salary hourly wage safe harbor. All right. Okay. That being said, you'll fill out box three. Then you move down to box two, which is going to be a list of those employees that made an annualized rate of pay of over 100,000. So we talked about this just a moment ago in the compensation caps. You have a cap of 100,000. So in that case, anybody who makes an annualized rate of pay of over 100,000, they're capped at the 100,000, and we went through those numbers together. Remember, that was that $15,385 or that $46,156, I believe, depending on the 8 or the 24-week cover period. So there you go. You'd put your compensation caps. In this scenario, I didn't have any high wage earning employees, so it's 0. All right, below that, at the very bottom of page 4, it has you thinking about the FTE safe harbors. Okay, remember there was 2, Safe Harbor 1 and Safe Harbor 2. This is tackling Safe Harbor 2, which in this scenario we did have. All right, so we had a reduction in headcount from the start of the pandemic to what was pre-pandemic or reference period. So before we got the PPP loan, the headcount went down to 2. All right, then what that head count was pre-pandemic was the 3.8. All right, that's what we had to hire to. All right, and then where we ended that covered period, right, that last payroll cycle in that covered period, that was that 4.10. So the way this works is if we end equal or higher to that reference period, right, that 3.8, then we have met the FTE safe harbor. And they're telling us right here in the step 5 that if we've met that, we can enter a 1.0 on line 13 of the Schedule A. All right, so spoiler alert, Schedule A is page 3. Okay, so we, good news, have met the safe harbor for the FTE 2, right? And we won't be seeing any penalties. We did it, all right? Whew. With that being said, we're going to move over to that page 3. That looks nice and squishy, doesn't it? Okay, so let's bring that up and look at it in more detail. This is super simple. Page 3 just looks at the information from page 4 and asks us to regurgitate it, right? Not hard. Line 1 is the total from box 1, table 1. There's that 18,000 again. Line 2 is the total from box 2, table 1. There's that head count 4.10. Line 3 actually is any salary hourly wage penalty that we would see under that box 3. But notice there's a big black box right there in line 3. Right? That's that safe harbor certification. Remember, we can claim that we did the best that we could and show that in the nick of time on that last payroll cycle in our covered period, that we increase that hourly wage or that salary wage within 75% of what it was pre-disaster, right? So if we can show that, right, we can document it, we can check that box, and we can enter a 0 for that penalty. We can avoid the penalty. Okay, so you have to really work hard to get a penalty, right? Because the safe harbors are pretty awesome. You have to work hard to avoid the penalty here. All right, and so lines 4 and 5, if we did have any high wage earning employees that made an annualized rate of pay of above 100,000, remember that other table 2 in there, we would be putting the totals there. In this case, we didn't, so those would remain 0. Below that, they're asking for us to total any non-cash compensation payroll costs. So if we had employer contributions to employee insurance, employer contributions to employee retirement plans, or any state or local taxes, right, we can put the totals there. We just have to make sure that we're documenting that by statements, canceled checks, that two-prong verification system. All right, so we'll put those totals there. And then remember I told you the owner compensation, right, did not go on table 1 or table 2. I was like, it doesn't matter if you paid yourself on a W-2. The owner compensation ends up on line 9 here on page 3. So this is the total paid to any owner employees, self-employed individuals, or general partners. This amount is not included under the Schedule A worksheet, table 1 or table 2, right? And if you have more than one owner employee with 5% or greater ownership, then you need to have separate tables listing out the ownership and the compensation. So remember, we talked about the fact that they're going to be looking for you to audit this, like to go back and confirm you did not exceed any 8-week or 2.5 months of your 2019 compensation. So make sure you're mindful of this. If you did pay yourself in 2020 or 2019 more money than you paid yourself in 2019, that's okay, all right? You just cannot claim that full amount. You're capped at the 2019 compensation caps, okay? All right. With that being said, you're going to go down to line 10, and that's how you calculate all your eligible payroll costs. You're going to total all of this together, right? So cash compensation, non-cash compensation payroll, right? Then you come up with the total payroll costs. Right below that, that's where all these bankers are using these self-certification tables. Right, so you see these little boxes again. Well, this is where you would self-certify whether or not you met the Safe Harbor 1 designation. Right, remember Safe Harbor 1 is when you did your best to try to rehire your employees, but you were following guidance from HHS, CDC, or OSHA, and you couldn't reopen in full capacity during that little block of time that you're spending your money, right? So therefore you didn't have the head count. You couldn't possibly, have them hanging around. In that case, you can check the box here, or let's say you were rock solid, right? You didn't reduce the head count, you didn't reduce the wages more than 25%. There is your no reduction in employees or average paid hours checkbox. All right, and then there's that Safe Harbor 2, and that's this situation. Remember, we had the Safe Harbor 2. We would want to check this box here that we met that requirement. Remember, when we were on page 4, at that very bottom, step 5, it said if you met that safe harbor, then you would enter a 1.0 on line 13 of the Schedule A. Well, here you go. Here's that 1.0, line 13. Good times, right? Okay, so I'm just going to tell you that that was the hardest part of this whole forgiveness conversation, and that's not that hard, right? It's not that bad. All right, so now we're back to page 1. And remember, it all flows together, and you've already seen a little bit of that. Deja vu, right? You know where all that comes. This bottom section looks very familiar. There's your payroll costs. It's going to flow through from line 10 on that Schedule A, right? That page 3 we just looked at. And then here's these non-payroll eligible expenses, right? Similar to what we saw on the 3508 Easy. You're just going to fill those in. Then down here, this is new. This is the adjusted totals, right? So you're going to take any penalties for not adhering to the guidelines, and then you're going to be able to reduce your eligible expenses by those reductions. Now, hopefully, you will have crafted a really good response to your safe harbors to avoid penalties. Remember that we tried to talk about that in great detail. You have plenty of options there, right? And you can avoid the penalties if possible. And then there's your three potential forgiveness amounts. So the first is going to be the modified total above, your total spending minus any reductions. The second is going to be the PPP loan amount, all right, so how much you borrowed. And then the third is going to be 60% of whatever that payroll cost was, right? Because you have to spend at least 60% of the loan on payroll to be eligible for full forgiveness. Right below that is the smallest of those three potential forgiveness amounts. All right, with that being said, we did it. We did it. We went through all the forms, right? We understand how we're framing the conversation. We understand how we're documenting, right? We understand the requirements of us. We also understand that it's going to be different, most likely digital and online for all of us, depending on the lender that we're going through. All right, now I'm just going to revisit some of those pain points that I'm seeing from PPP borrowers. Okay. All right, so these are the current trends. Banks have not updated their forgiveness portals to include any new installment loans or that PPP draw second draw conversation, right? So maybe people have gone on there and done the first loan, but they're tied looking for help to get rid of the second loan, right? And so what I'm hearing from lenders over and over again is that they were too busy, trying to get the loans out. The program just ended like a week ago, right? May 31st. And so they're waiting until July to really turn on the portal and allow for that second wave of PPP loans to request for forgiveness. So that has nothing to do with you. Just make sure that your documentation is up to par, right? And that I would just go ahead and do my PDF version of the forgiveness application. Just fill it out, right? We walk through it. You know how to do that now. And then you just put that to the side because your PPP lender should be communicating with you and instructing you on how to go about filling the requirements for forgiveness, right? You'll be ready to go as soon as they open up that portal. All right. I did want to also make sure you guys knew you have 10 months from the end of your covered period to apply for forgiveness and receive it. 10 months, right? So if it takes them a couple of weeks, no skin off your nose. You're good, all right? You'll be fine. You just want to make sure that you've got your ducks in a row and you're ready to go as soon as they are. All right. Next, I'm seeing there are, when you call over to the PPP lenders, people are confused. They're not giving very good directions on how to make applications. And unfortunately, I'm seeing a lot of those bankers not able to answer questions accurately, which is adding to the confusion for the borrowers, right? And that's unfortunate because I know that's not their intent. They just unfortunately have been under the gun and so much pressure and so much has happened and changed quickly. They're just not keeping up with the conversation. So don't let that be on you, right? You need to communicate and document what you're doing. Just please document everything. Put it in writing. Make sure you have a record. If you have any problems, right, showing that you were active in trying to solve the problem and being able to show that in writing to both the SBA or to your lender, highly advisable. All right. In the SBA world, if it's not documented in writing, it didn't happen, right? So you want to make sure it's documented in writing. Okay. I also am hearing from the folks that there are really unclear timeframes for processing. Some people think that they're going to see that forgiveness overnight. Some people are being told crazy amounts of time, right? All you can do is the best you can do, right? And you're the one in charge here. You're the one that's held responsible and accountable. So just make sure that if you turn in your forgiveness application and it's still showing up when you log into your account to view your bank records and it's been, I don't know, a month and nothing's happened yet, right? Don't forget about it, please. Right? Maybe something didn't happen correctly. You need to make sure that you are staying accountable and you're staying on their toes, right? You're keeping those bankers on their toes and you're making sure that things are being processed accordingly, right? I've seen too many things fall through the cracks. And if you get beyond that 10-month window, there's no going back. Okay, and we're starting to get to that point right now for the first round of PPP funds. 10 months was April, May, and June, right, for a lot of those borrowers. So if you're in that group, please, please, please ask questions and get support. right? As well as a lot of the communication coming from the PPP lenders is automated conversations, and it really doesn't have a lot of support to answer detailed questions, right? And that's why your SBDC has made this type of program available to you, so you can get that type of detailed support. But unfortunately, it's not it. The lenders are not able to provide that. You really need to go to your SBDC for that type of support. They're just not set up for it, unfortunately. All right, and then I'm seeing a lot, and I mentioned this before, I'm seeing a lot of borrowers misuse their funds, right? And that's unfortunate because there's no way of going back in time and trying to recreate the situation and having them respend the money a different way. So make sure you know what payroll was used to calculate your loan amount, right? We talked about that. I gave you that little scenario of that business owner that was paying his 1099 laborers, thinking that he would show documentation for paying his employees, which they weren't true employees by the PPP definition, right? They were contract wages. And he didn't pay himself. And so he got to the very end, right? There's no other time, there's no more runway. He got to the very end and he, misappropriated the funds and he can't get forgiveness because that's the way that happened, right? You don't want to be in that situation. So make sure you understand what the loan was calculated for. In this situation, it was a Schedule C filer, right? That money was designated for him, not for others. And he had to show that he paid himself and he didn't, right? So make sure you understand what you're being given the money for and you follow that guidance. All right, and this, the really hard side of this is fraud, right? SBA has been sending out warnings left and right. In fact, they've got training programs now because the fraud is so prevalent. I've seen some of the fraud that's come out and it is good, right? It is really scary good. And in that case, you have to be very, very careful, right? The public information has gone out through this program. Now all these fraudsters have small business owners' contact details and information on their businesses, and it looks legit. So if you are uncertain, right, best thing I can tell you to do is to reach out directly to SBA through the 1-800 number and ask for them to confirm that they did send out communication to you. Please do not give out your SBA application number or any details if you are not 100% certain that it's SBA calling you. All right, and the fraudsters are really good. I'm telling you, they look legitimate. So just please be careful with your personal information out there. All right, so those are the current trends. So now we're going to go ahead and end on important details to remember. So the PPP program has ended, right? It's done. There's no talk about renewing it or giving any new money. The talk is about reopening, and we are seeing that those states, including Texas, have successfully started reopening, and we're almost at fully opened here, right? So going back to disaster is not the conversation. Everything's talking about growth and going forward. So as you are looking to end the PPP program and get your forgiveness, be proactive in the communication. Hopefully, my little notes before are going to be helpful for you to understand how to be proactive, right, and what type of conversations to have. Also remember that there are penalties for not adhering to the guidance, right? And those are real. It can be very expensive. So you want to make sure that you're really using those safe harbors, carving out the right conversation, documenting that spending as best as possible just to put yourself in the best position. Right, so document, document, document. I cannot tell you enough. If you can't document it, it didn't happen, right? And when you're dealing with the IRS and the SBA, you cannot mishandle government money. So make sure you get your two-pronged system set up, all right? And then the safe harbors are there to provide flexibility and support. Just know how to use that in the conversation. Be conscious of your spending. Make sure it's going to be for legitimate spending use, right? Something that is allowable through PPP. PPP is different from EIDL, right? You have to make sure you understand the conversation you're in and you're not duplicating support, right? And then anticipate SBA will audit you. Right, I can tell you, I'm seeing small loans be audited, and it's throwing people for a loop. But if you're prepared and you're doing your two-pronged system, it won't matter if you get audited. Now, the government will hold on to your records, right? And the audit potential for 4 years. 4 years is the new measure. So you must be in this conversation whether you sell your business or not, whether you merge your business, you are in this conversation for 4 years. All right, so make sure you keep your documentation. All right, so in summary, support for small business during this time is evident. We've seen the government do some amazing things, and in today's economic forum through Moody Analytics, right, it is really heartwarming to see the good news come out of the community, the small business community. Delinquencies is at all-time low. Businesses are positioned to grow, right? Banks are out there. They're hungry for loans, and so they're looking to support businesses. We've got further money that's coming down the pipeline with additional initiatives to get people back to work. It is positive, right? So make sure that you are adhering to the guidance, understanding your responsibility, and asking for the help as you need it, right? Because your SBDC is there helping you through these conversations, guiding you through to the other side. So with that, you can always reach out to your SBDC advisors for more support. My name is Rebecca Schultz. I'm the founder and executive loan consultant for CenterLock. I love what I do. I love connecting people to money. It is so much fun for me. If you have questions that I didn't answer in the presentation, feel free to reach out to me. I'm happy to go ahead and answer those questions. But in the meantime, remember your advisors are there. They're supporting you day in, day out with training like this, as well as individual one-on-one coaching. All right. With that being said, I'm going to conclude the presentation. And I'm happy to answer any questions that have come up.
Okay, Rebecca, as usual, wonderful, wonderful information. Um, if you have any questions, go ahead and put them in chat, and Roger's waving. Roger has questions.
Rebecca's like, oh no, not this guy again. And it's thank you for that update on the PPP and the forgiveness. It's you know, it's something that we're all going to need. But my question was a little off topic because I know you addressed the Moody's and their optimism, which is great, and I know that you kind of addressed the um, lack of future funds that may happen for the pandemic and different stuff. But one thing I just wanted to ask how or any input that you could give us how the SVOG was doing.
Yeah, so the SVOG got a late start. So remember, the application system crashed and they're getting through the conversation, still labor intensive. I haven't seen any numbers from SBA on how much of that funding has been utilized. I do know from conversations I had directly with my local SBA that they're still having a hard time getting through those applications. The actual application process takes a long time, right? There's so much that has to be considered, and the metrics for that is very different.
Yeah, it was like, the right hand on the PPP and even the idle was like asking for like three pieces of paper, right? And
Yes,
the SVOG on the left hand is asking for firstborn and then their firstborn and it's yeah, it's intensive for sure.
it is definitely, as well as just even being able to apply for it was like jumping through fire hoops.
Yeah, I
With that.
I had one client that really just doesn't know if she even qualifies, so to speak, but she went through all the hoops and gathered everything and put everything in, but she still hasn't, she doesn't know. So, but
Yeah.
as far as the funds on those are concerned, we're quote still okay on that.
Correct. I do know that they have not stopped. They're still out there looking and assessing. We are in the what they would consider the third round of funding, meaning that those that maybe have already received funding originally and they were first or second priority. So that's 90% or greater reduction in gross revenue between 2019 and 2020. And then the second priority was 70% or greater reduction in funding. Third round of priority is those people can come back a second time, right? Especially for those that are smaller and have less than 50 employees. But I honestly have not heard of anybody getting the money. I'll be honest, and I'm in these conversations every day, so I haven't had a single one that has come back to me saying they were funded. So I'm like, I think your client's in good company.
Yeah.
So
Okay. All right.
yeah,
Well, thank you for that. I appreciate it. And thank you for everything you do.
yeah, no problem. I am happy about it.
Okay, I have one question. Something that you said earlier. You said to be sure and only enter the amount of funding you received. No more. Okay, has that happened? Has it happened that someone has asked for forgiveness for more money than they actually received?
Over and over and over and over again. Yeah,
Wow.
yeah.
Wow. Um, and can you talk just a little bit about the EIDL? I know that the SBA has been sending out a lot of emails to businesses saying you qualify for additional EIDL funding. Does you may qualify or qualify? Does that mean you got it, or if they apply for it, it's a given, or what do those
Oh,
emails mean?
that is a good conversation. So I feel like when you get that email, yes, it's a call to action if you actually need it.
Mhm.
But that's another labor intensive conversation. It's taking a long time for those files to be reviewed. I have some people that got that email, right away, right? Maybe back in April. And here we are 2 months later, and they are still calling, trying to get a loan officer assigned to the case. All right. I just got done talking to a business owner who had struggled to even get the EIDL loan. He finally, just before that email came out, received the funding, and then almost back to back got that second draw conversation going. And here we are today. The document requirements are pretty intense. It's pretty intense, and they are requiring that the 2020 taxes be filed in order to be considered. And so a lot of people are still trying to get their accountant on board to help them. I mean, 2020 is a complex year for a lot of business owners, so it's not so easy to get the taxes filed and put away. But they're not only requiring that you file those taxes, but that the transcript request be available. And there you go. That's like that second shoe. Like, just get the IRS to be able to be on board with everything. But he ended up having to go into the IRS office and personally make the request for the tax transcript because the SBA wasn't able to receive it 2 times in a row. And I mean, I'm just telling you the level of work that's being required for business owners to be able to get the updated idle, offering is so extreme and the processing so slow. I just want people to be prepared. Like that is what's happening. And if you need the disaster loans, right? Like again, disaster is a whole different conversation. If you are about to close your shop and this is the only way you're going to stay open, and there's no way that you would qualify for any growth capital, then yeah, that's the conversation you're going to stay in. And just like that one business owner, you're going to duke it out to the very end, right? Now, on the other hand, the growth capital that's out there, right? That's at this point easier to get than the additional idle money, right? Maybe you should be in the growth capital conversation, and that's a very robust and much simpler conversation.
Rebecca, it seems like those emails that were being sent out in the beginning saying, hey, you can increase your idle from where you were because you were capped at 150 or whatever. It seems like those emails have gone silent because I have customers that are saying, I'm not getting the email that, others got. But it seemed like the ones that I do know that got it, they were really early in the process in 2020, but now like those people aren't.
Yeah, there's no rhyme or reason to who's getting the message. I mean, that's what I've surmised. I would like to think that that type of messaging was targeted to businesses that were small, that were considered harder to hit industries, and I have seen some of that, right?
Yeah.
But then there's other examples where it doesn't make sense that, one business owner didn't get the help and the other did, so I don't know. It's so across the board. All I can say for business owners to know that the funding is there and to request the support and to be
Yeah.
active in the conversation is really, I mean, you have to be your own advocate in
Mhm.
this idle
Yeah.
conversation.
I had a customer that applied for an idle, and I believe he's just about at the funding level. And he applied maybe 2 weeks ago, and yet, I have people that are just trying to get more money from their first idle that just haven't done anything. So it's just
Yeah.
tough.
It is. It is. Again, I'm a big proponent for you want to be in the right conversation. What I'm worried about people doing, and the reason why I'm worried is because I'm in those conversations and people think that it's owed to them. Like, if the money's cheap and it's out there, I'll take it, right? And they don't necessarily need it, but they're not going to turn away support when it's going to help them. And so, if you're in that conversation, please be aware that when you take disaster assistance, that says something about your business. Okay, it says that you're not going to continue, you're not going to survive without that money. You are publicly making that statement, okay, to everybody, and it is public record that you needed that handout. And depending on what your exit strategy is and what the world looks like in
I,
the next 5 years,
I know.
you may not want to be associated to that conversation.
Yep. Yep.
Mhm.
Wow, I never thought of that. I never
Oh
thought
yeah.
about that.
The
Um,
the exit strategy is very tough
Oh yeah.
conversation.
mm.
Awful. It's awful. But if you need it and it's, the only way you're going to survive, then, livelihoods and jobs, that's very important. You do what you got to do as a business owner to keep things. But it's definitely not something, it's not like extra candy, right?
Just in case.
I say.
Okay, I think that covers all of our questions. I just want to thank you for joining us, Rebecca. As usual, wonderful information. I want to thank everyone on the webinar for joining us. You'll all get a survey, and we would appreciate you actually responding to the survey because it helps us know what kind of information you're seeking, and we're always looking for ways to improve our program. Excuse me, we have some really interesting webinars coming up. Tomorrow will be a great one. Tisha Dodge, she is our resident legal expert, going to cover employee handbooks. And it may sound simple, not really. And she's also going to give us some updates on COVID-19. Then on Thursday, we have Jamie Oglethorpe coming back to talk about how to get clients begging for more. That should be really interesting. Next week, we revisit our social media with Marcia Hudson. And back again next week is Lorna Kibbe. Wonderful, talking about professionalism defined. This will be great. And then Jamie will be back on how to attract your target market. Those are next week. You can register for any of these webinars on our website, sbdc.nctc. Sorry, there's something in front of me. sbdc.nctc.edu. You can register for those webinars as well as get contact information. You can schedule an appointment with an advisor. And there's also some resources out there available to small business owners. We want to thank our benefactors, I'm sorry, I lost that slide. Our benefactors, the Small Business Administration, the state of Texas, the North Texas SBDC Regional Office from Dallas, and North Central Texas College, our host. And thank you all for joining us today. We look forward to seeing you next time. Be sure and join us tomorrow to hear from Tisha Dodge. And that's going to end our webinar for today. Please be sure, visit our sbdc.nctc.edu and sign up for tomorrow's webinar. Thank you, everyone, and great to see you.
Thank you. Bye, everyone.